Hi, welcome to our 8th video, which is our final video. So earlier on, we have shown you how you can execute a sell put options and also sell call options. But sometimes we might get too excited at certain news and we decided to sell put options at certain stocks that we think that it might be a good opportunity. But then after we have done our due diligence, we realize that it might be a wrong choice for us to sell put option for a certain stock. So if let's say the stock has already been filled, the put option has been filled, that means it's already in our portfolio, how are we going to rectify the mistake? So earlier on, I tried out a few of these trades to see how it actually works. So let me show you in short how it actually works. Then we'll run through another one. So it might take some time for the order to be executed. So I'll first run the order through, then I'll show you how it actually looks like in another trade. So right now we can see here in our portfolio, I've put in some put options. So there's a Palantir that will be expiring in 6th of October and the strike price is at 16. And we also done an Intel, which we recorded in our earlier videos. This one was done a day before, and then this one was done just recently. So let's say you have done, you have executed the sell put option just recently, the mixer is quite easy to rectify. But if let's say it's a few days ago, do take note that the premium that we have to buy back the put could be slightly higher than the premium that you collected. So for this example, we will do the Intel because it was being done previously. So here, the expiry is going to be in the next 16 days in 20th October, and the strike price is at 34 by selling put. So currently we sold a position for Intel. So now let's click on Intel. Okay, so here, this is how it actually looks like. So now to close back, that means to close this position, we'll right click and then go to trade. And then close selected position is always 100%. That means we want to close everything. So let's click 100%. And then you can see it will show here how are you going to close the position. So this one is the expiry date at 34 strike price, and you are buying back the put. So how do I know whether how much premium should I pay? So you will refer to here, because if we look at this option chain, 20th October expiry at 34 strike price, and then under buy is under ask. So we can see that the premium is 0.48 to 0.49, which tallies here. Okay, so here is buying back. That means we are closing a position using limit, one quantity, one contract, and then the price, when we buy back the contract, we will usually set as low as possible because we do not want to pay that high amount of premium. Earlier on, if we have seen for Intel where we have executed the put order, here, this one is the one that we have already executed. So we actually collected $50 of the premium. So in order not to have a loss, we try to pay back the premium as low as possible, or equal to the premium that we actually collected, so that we do not have any loss. But if let's say the premium is slightly higher than what we have collected, then no choice, because we will wanted to close the position, but it's better to close it now than wait a few days later. So now let's go and see. As low as possible is 49, so let's try 49. Okay, and then submit. Okay, so once you check everything is okay, then override and transmit.
Order filled.
Okay, so here it was quite fast. So that means the order has already been closed, and the fill price is at $46. So that means we pay $46 to close our position. So earlier on we collected $50, but now we pay back $46 to close our position. So that means there's a net $4 of profit that we actually earn by closing off this position. So here we see that earlier on there was -1, but then once the position has been closed, it's already 0. So now let's look at the summary. So here there are 2 put options that we executed today. So here, this one is the one that I've executed earlier to try it out to see how we can rectify the mistakes. So we can see that earlier on we sold a position and then we buy back the position. So now we no longer have any open put options in our portfolio. So Intel is also the same. Earlier on, we sold one put option, but then we tried to rectify our mistake by buying back the put option. So right now the net is 0. So we sold the put options at 0.5. That means we collected the premium at $50. But then when we try to rectify the mistakes, we have to pay back to buy back our position, to pay the premium. So we paid $46 to buy back our position. Okay, so it's a net about $4. Not bad. I would say it's a not bad deal. Okay, so this is how you actually rectify the mistakes. I hope you have enjoyed the tutorial so far, and I will end this video. And do have fun trying out the platform of Interactive Broker TWS. If you feel that you are still not comfortable, you are always free to use the paper trading to try a few of the trades during the market open before you decided to use your own money to do a real trade on the stocks, like whether to buy or sell the stocks. So thank you everyone.